Hey everyone, welcome to Smart Investing. Today is January 20th. It is 10:17 p.m. and markets are closed obviously. So I have these three bank stocks for you guys today. So first one up is SSB, South State Corporation. I know usually I talk a little bit louder. I don't know if that's an interruption in my audio, but my family's asleep, so I decided to make two more videos. So if you guys can't hear me, I apologize. I'm trying to sound pretty normal, but not too loud. So again, hopefully you guys can hear me and the audio comes out okay. So first stock up is SSB, South State Corporation. I believe I've heard of this bank. I haven't seen too many locations out here in the East Coast, but I've seen very few locations of this bank here in Florida. So going over this stock, we have the share price at 69.17, so basically 69 and 17 cents. We have the volume and market cap here. Volume is at 685K and market cap is at 5 billion. 52-week high and low. Difference of about $30, more or less. So that is a good range. Earnings are at 7. PE is at close to 10. Price to book basically is at 1. So it is a little bit undervalued. Dividend is at $2. Dividend yield is at close to 3%. It's not much income and the yield is not that high. Now we're going to move on to the charting aspect, also known as technicals. A lot of whipsaws here, up and down movement. We have the 200 EMA going back and forth. So obviously ever since 2020, anything below that would have been nice. Then the next opportunity would have been October in 2021. And as of right now, we see, I wouldn't say, I wouldn't say it's a good opportunity, but it's undervalued. Doesn't mean it doesn't mean it should be bought or even paid attention to, depending on market conditions and the evaluation on the stock, and see how well it holds up on numerous occasions. If you're doing the short term, obviously you want to look at the volume and all that, and look at all those other factors to see if it's an opportunity. I just don't see it. So to each their own. What may not work out for me may work out for somebody else. So hopefully, other stocks in the banking sectors work out for other people. But I'm going to do what I see fit that works for me. So moving on to the technicals. Again, I wouldn't say it has potential. I mean, it just looks pretty neutral. It doesn't look bad and it doesn't look good. It's just kind of normal. So analysts have it rated at 75% buy. That's pretty standard. And then a 25% hold, pretty standard from Wall Street. So highest rating for the quants is 6.3. So obviously it's just showing me that it's undervalued. Company for the actual numbers here. We have Q2 2022. We have earnings estimates raising in Q3 2022 and Q4. Then the start of the year for 2023 is slightly declining. So we have here a beat, and then a miss in 2023. Then we have annual numbers here. So pretty weak numbers overall. Net margins seem pretty good. Debt to asset, pretty normal at 88%. Revenue, revenue looks pretty good actually the past 3 years. I'm surprised with their net income though for 2020 though. If their revenue was pretty much gaining at least, 20%, and it's just gained close to 20% the next 2 years, which was 2021 and 2022. So we're gonna look at the cash flow, see what's going on with that. So they are in negative cash flow. You have here negative 2 point. So yeah, they're definitely in negative cash flow territory, at least negative 3 billion. That's a long way down the hole to dig out of. I don't think they can even afford the dividend. I don't know why they're giving raises. To be honest, I would expect them to remain flat until they lower that negative cash flow. And definitely the stock is not even worth it. So we're gonna move on to the next one, which will be BOKF. BOKF, $86.38. Market cap at close to 6 billion. Volume's pretty weak. But by those standards for the banking sector, I mean, they seem okay. It's not actually dead, but, it could be better. The 200 EMA is at 84.68, just above their 200 EMA, as you see right there. Then it actually dipped below the 200 EMA on a 1-year time frame. So you can see it's held up a little bit, but then it just went right back down. So that's the further confirmation. And you can see that's not a small move down, that's sort of big. I mean, it dropped below the 200 EMA, and it's getting closer to it passed the 100, and it's getting closer to its 50-day EMA, which would be at 84.88. So only $2 away. So moving into the first page, looking at the numbers, decent range, 52-week high and low. PE ratio undervalued. That looks like a good sign. Price to book, a little bit above 1, still a little bit undervalued, but almost getting there. Then we have analysis, moving into that. 89% rated hold, and this was from 9 analysts. So pretty much quite a few analysts have covered this stock. Highest rating was 6.76. Overall rating was a 2. I want to see why they give it a quality. So they have been beating estimates, as you can see, really, really nice. And by wide margins there, the small margin. So it started to stay flat ever since Q4 2022. And again, to solidify some really nice wins. And they've beaten the last four estimates, which puts it on a pretty good winning streak during a hard time. So with that said, again, it's going to come down to cash flow, but they seem pretty decent. They seem pretty decent. Even though I don't like the stock, they still seem pretty decent. So earnings per share, the net margins, pretty good. And the debt, 90%. This is all regular. Seems pretty flat for the last 5 years for net and revenue. So now we have left is the cash flow, which is what we're gonna go over. So yeah, they are about negative 1.3 billion. Negative 1.3 billion in cash flow, negative. So not even the net income would cover it. So I'm gonna say no to this stock as well and move on to the next one. Last one is HTH, Hilltop Holdings. We have this one at $31.03. Market cap at $2 billion. Pretty decent. Now for the 52-week high and low differential, not bad. PE ratio is pretty high. Jeez, really, really high. Even though the price to book is showing me below a 1, but the PE is showing me close to like 18. So I don't really know what to believe. But anyhow, the dividend payment is at 64 cents. Dividend yield is pretty bad. And the earnings at 1.73. Those are pretty weak earnings. So far, the stock seems okay. Me personally, I don't like it, but I'm just evaluating it overall as if it wasn't for me. So looking at the 5 year, it's been holding up above its 200 EMA. Excuse me, and sorry. So it's been holding above its 200 EMA. You see, it's been fighting in 2022, and now it looks like it's gonna fight again, even though it is above and holding its level above the 200 EMA. So it's doing okay for now. I'm gonna jump into the quants and see what's going on with that. Oh, Wall Street rated this and underperformed 25% based on 4 analysts. So one of those analysts have said that this company is going to fail and do pretty bad this year. Highest rating for the stock is 6.8. Coming in second place, literally almost tied. Almost the same exact number for the momentum, which is the income. I don't think that's a large enough income, to be honest. It's pretty weak. I don't know why they rated it so high. Overall rating was a 2 out of a 5 for the quant rating. Momentum, I don't really see momentum with this neither, so I'm going to have to disagree. Looking at their estimates and the results here, you see they beat it by a wide margin, and they beat it. And these are just pretty impressive numbers and a lot of wide margins here that they beat. So I would expect this stock, let me see, if they're beating by wide margins like that, yeah, I would expect it to stay above the 200 EMA. And again, that's no easy feat. You may have large beatings, you may have large beats for your estimates, but that doesn't mean Wall Street is going to favor you. You pretty much have to favor yourself. Now let me open this again. I apologize because it's not giving me those annual estimates. So we're at HTH and we're gonna look at the company, and here we go. So we have here they're dropping in their ROA and their ROE. Earnings are dropping, net margins are dropping, everything seems to be dropping. That stayed the same. It's looking pretty awful. So, yeah, another company that's ready to go. Bankrupt, negative cash flow as well. So there you have it. This company is awful. So there you have it. HTH, do not watch list. So that's all I have for you guys. I have one more video after this. So again, thank you guys for watching. Stay tuned. And I'll see you guys real soon.